Hello and welcome to the Sports Business Podcast with Prof. C, the podcast that explores the world of professional, collegiate, amateur, and Olympic sports. I'm Mark Conrad, or Prof. C, from Fordham University's Gabelli School of Business, where I serve as Professor of Law and Ethics and the Director of the Sports Business Initiative. On a recent podcast, we discussed taxes with Robert Raiola, an expert in this field who has worked with over 100 professional athletes in the 5 major sports to give us some of the ins and outs dealing with the numbers, rates, and different types and scales of taxes that athletes pay. As some of you may recall, Mr. Raiola is the director of the Sports and Entertainment Group in the firm of PKF O'Connor Davies in Cranford, New Jersey. He has more than 20 years of experience in both the public and private sector. That episode was recorded before Shohei Ohtani signed a 10-year deferred $700 million contract with the Los Angeles Dodgers. Mr. Raiola has graciously agreed to join us again to discuss the tax implications of Ohtani's unusual contract. Robert, welcome back to the Sports Business Podcast.
Thank you for having me, Professor.
Okay, let's review this contract between Ohtani and the Dodgers. A 10-year contract totaling $700 million, but how the money's paid is what makes it unusual. Could you explain what makes this so unusual?
Sure. This contract is most unusual because of the amount of deferred compensation in the deal without having any interest paid on the deferred money. So the total deal, as Mark alluded to, will be $700 million for 10 years. From 2024 to 2033, Ohtani will receive $2 million per year. From 2034 to 2043, he will receive a whopping $68 million a year for each of those years. He does not receive any signing bonus, but the whole key here for him is it is entirely possible that the deferred money he would not have to pay California tax on. So California has asked the IRS to help them out with changing some coding in their law in order to get this income to not be taxable in California.
Now, do you think that was a factor in the negotiations for this kind of deferred compensation deal?
I think what happened, Mark, they're trying to get around, for the team, around the luxury tax. And by taking only $2 million a year, let's not feel bad for him. He's making $20 to $30 million endorsement money, so he can afford to live on the $2 million a year. Because in fact, he's got a lot more endorsement income. So I think that they knew what they were doing, and they had a really good accountant who figured out that this might work for them.
Well, let's talk about California's tax rate. Now it's up to 14.4%, and that would be an awful lot of money if he was getting paid the $70 million every year.
Yes, what it is, Mark, is the first couple of years is $2 million, and on the side, whatever he gets in endorsements, so it's not really a factor. And then he gets the $68 million a year, so it wouldn't be 70. He'd be getting $68 million a year deferred. Most unusual that there's no interest here, but if he could, at the law as it is just now, would say that if he became a non-resident after the deferral period, he would pay no tax to California, which obviously, as you alluded to, is huge. Of course, the rate now on wages is up to 14.4%.
But what does the Internal Revenue Service or Internal Revenue Code say about this issue?
They say if it's a retirement income and deferred comp meets that he would be able to exclude it from income as long as the payments were over a certain period of time. And I think that they said to the effect that the payments equal in remuneration that he would receive.
But is it really retirement income? It's deferred income, so it's not the same as a pension where someone moves to Florida and say, okay, they're not in California anymore, but it's really part of his employment contract. So couldn't California say, simply say, like, look, it's part of your payment, your compensation, we're delaying it.
They could. And, I can tell you this, that in 10 years from now, there'll be a battle between California and Otani's representatives as to which way they should go.
And do you think that it'd be possible to amend the law on California's side, either through Congress or through Sacramento?
It's possible you hit the nail on the head that they would have to go to Congress to change the law, but it's a lot of money to California's coffers, and you can bet your bottom dollar that they're going to go after this and try to recapture this money.
So let's say Otani plays 10 years with the Dodgers and quote unquote doesn't play anymore or may go to another team, in fact, and resides in Florida, which has no state income tax. So the position that Otani would say is that, you know what? I don't have to pay tax on 1 cent of the $68 million in the next 10 years. Is that correct?
That is correct, Mark.
And then what happens if he goes to live in Japan? Or let me ask first the question, does he still have a residence in Japan? Does
Well,
Japanese tax law have anything to do with this at this point?
we believe that he's gotten his dot his I's and crossed his T's in the number of years he was with the Anaheim Angels, that he's faced this issue and resolved it by getting out of Japan. The problem with Japan is that they have a 35% tax rate plus a 10% consumption tax. So he'd pay 45% over there, whereas over here he'd only be paying the 37%, especially if he is able to get the money not taxed in California. But for purposes of what we did in an article, we figured that he would not be subject to any tax in Japan
At all?
at all. Yeah.
Now, is there a tax treaty between Japan and the United States?
Yes, there is.
And does that generally say that there is an exclusion for taxes earned in the United States by a Japanese national?
I'm not sure as it alludes to that, but like I said, we're on the phone with our Japanese office and we asked them, and they said their feeling was that he wouldn't be a Japanese resident for purposes of this tax situation, hypothetical.
So even if he moves back to Japan, the position would be that he may not have to pay any taxes in Japan.
That's a possibility. I think he'd be better off staying in the U.S. and occasionally visit Japan.
So now let's say he wants to stay in California. If he stays in California during those 10 years, then there's really no issue. He would pay it anyway, correct?
That's correct.
So what do you think motivated him to have so much deferred income? The endorsements only last so long.
That's a great question, Mark. I mean, I could see him wanting the Dodgers to get other really good players and opening up some more money to spend in free agency, which they did by getting Yamamoto. They signed him after subsequent to signing Otani. But that's an awful lot, and without interest per se. I guess he's living off those endorsements. Like you said, that could dry up. But if that's what his people chose to do, I don't think he had to do it to that extremity, but he went ahead and did that.
Well, does this create a precedent for other players to do something like this? Because in baseball, obviously, it's allowed. So do you think this could be attractive to some other players in the future?
No doubt about it. If he was to get the money equally over the 10 years, it would be a lot more than $2 million a year. But the player's going to look at this and say, if Otani did it, and he's at the end of the day, he's getting $700 million. No matter how he gets the money, it would be $700 million. But if he was to get equal payments over the 10 years, the present value of the contract would be a lot more than it is the way he's structured now, because he'd have money a lot sooner.
Right. And that's it with inflation and other things. So he's, in a sense, sacrificing money he could earn right now for banking on the future.
Right. And again, I'm not saying that he did it only for the Dodgers' benefit. Obviously, he got a lot of money, but the Dodgers will benefit, and they did benefit by signing Yamamoto, and they had the money to play with the luxury tax because Otani took less money in the first 10 years.
But from the Dodgers' point of view, the team has the luxury, if you will, of creating a deal like that some poorer teams may not. Just for listeners who may not know, the Dodgers have a very lucrative cable deal that extends for many, many years, and that could fund this sort of thing. But say the Milwaukee Brewers may not be able to do that. So is this technique or tactic going to be limited to the few wealthy teams in baseball?
That's a good point. It could be limited. But they could always try to take some form of the compensation structure and, try to iron it out that would work for them. Maybe not to the extreme that Ohtani got, but maybe on a smaller scale, it would work for the team. They like the fact that there's no interest on the payment.
And you would say that's a concession by Ohtani because of
Correct.
the Fed inflation rate, and the Dodgers could be arguably by today's dollars, it's not 700 million, it's maybe 500 million.
Right. I agree with your point. Let's not feel too bad for Ohtani because with the endorsement income and the 700 million, he's in great shape no matter how he decided to take the money.
Well, I think that's true. Most of the people would feel like even the $2 million a year would be fine. And he certainly made good amounts of money when he was with the Angels, too.
Correct.
We can't forget that. So, indeed. But anything else that struck you about this deal?
I found it extremely fascinating. And the next player, the Yamamoto, when he signed his deal, he got a signing bonus up front, but he didn't play any games with the deferred comp.
Okay. Well, thank you very much for coming back to the podcast and look forward to seeing you in the future sometime.
Thank you very much, Mark, and thank you, Victoria, for your assistance as well.
You're very welcome. Thank you for joining. On that note, on behalf of Fordham University, the Gabelli School of Business, and the Sports Business Initiative, thanks to Robert Raiola for coming back on the Sports Business Podcast with Prof. C. And thanks to my producer, Victoria Ilano, for her great work. And thanks to all of you for listening in. For the Sports Business Podcast at Fordham's Gabelli School of Business, I'm Mark Conrad, or Prof. C. Have a great day.